Okay, very well. Okay, so what are we doing? All right,
He
well,
said us we have earnings per share.
good. So let me restate the dividend. The dividend we calculated is 0.1159. That's the dividend we got. Then we now
Yeah.
say, we said retained earnings. Retained earnings will now be equal to, what is the EPS?
The EPS is
EPS minus
minus
DPS.
GPS.
How much is the EPS?
The EPS is 25 kobo.
25 kobo. That's 0.25 minus 11, like about 12 kobo.
I'm sorry, but that's our
Yeah,
GPS we got. You know that we didn't multiply it by 100.
it's fine. It's in kobo. If you multiply it by 100, it would be 11.59 kobo.
Okay.
No problem.
Just,
It, I don't even want us to multiply it by 100. But if you multiply it by 100, that means you'll be writing it like it's not going to be 11 naira. Do you understand?
yes,
You
it
will
could be
write it like
confusing.
it's 11.59 kobo. So it could be confusing. Someone will be thinking that it is 11 naira 59 kobo, but it is
Mm,
11.59 kobo. So that's why I left it as, okay, let us say 0 points. And that's why I'm putting naira there so that it will be more explanatory.
okay.
So what is going to now be our retained earnings? This is going to be
Okay.
retained earnings per share. What do we have?
That'll give us 0.5 That'll give us 0.1341.
0.1341.
3441.
Okay, 13 kobo. So total retained earnings will now be what? Total retained earnings. We need that one. So what is retained earnings per share? 0.13. Let's just say 0.134. Okay, how many shares do we have? Multiply by number of shares. How many shares do we have?
We have so we have 6431
How did you get 641?
from the market values of
You are
market value
giving
of
me, yeah, you are giving me market value of it. You are supposed to give me number of shares. We already said retained earnings per share is 0.134. So if you want to do total retained earnings, what do? It's going to be 0.134 multiplied by number of shares to get total retained earnings.
number of shares would be 233 divided by
Yeah,
0.1, which is
exactly.
2,200 2,350.
Good. 233 divided by 0.1. So what is going to be our total retained earnings now?
The total retained earnings will be 0.1, which will give us 312.22.
300 and what?
12.22. 300,
352.
312.22.
Okay. 312.52 million. $312.52 million. Now, what did I say we are looking for? We are looking for dividend and growth rate. We have gotten dividend. So we are now looking for growth rates. Because there is retained earnings, there is growth rates. And we are going to use Gordon. And thank God, the examiner had already said we should use Gordon. Now, using Gordon, what do we need? Now
We
say
need
you
we need
using,
RB,
okay,
which is
all right.
uh,
So using Gordon to calculate
growth.
growth rates. So growth rate is equal to R times B, where B is equal to what? Retention rate.
Retention rate
Re
is
retention rates. Now, what is the retention rate? Retention rate. What is the retained earnings? The retained earnings is what? 0.134, right?
yeah,
What divided by EPS, earnings per share times 100. So retention rate is equal to retained earnings divided by retained earnings divided by earnings after tax or profits after tax times 100. Please don't forget this. So this is how we calculate retention rates. So what's our retention rate now? EPS is 25 kobo, 0.25. So what's our retention rate?
our retention rate will give us
I didn't get you.
that will give us 53.6%.
53.6%. That's fine. So we have gotten B. It remains R.
Yeah.
Please let me know if any area that is confusing. Now, your R, what's the formula for R? R is what? Profit after tax divided by opening shareholders fund. Okay. Shareholders fund is also known as total equity. Okay, or it is also known as net assets. Don't forget that.
Yeah.
Examiner can use those things interchangeably. Total equity or net assets. Now, what is our profit after tax? Where profit after tax, it is equal to what? Did you know that It is profit after tax is 25 kobo. That is earnings per share. It, so profit after tax is equal to 25 kobo. How many shares do we have? We have
We have
223 divided by 10 kobo.
10 kobo.
So what is going to be our profit after tax?
Which is 582.5.
582 point good.
8.5.
582.5 million. $582.5 million. Okay, now, so that is profit, total profit after tax. I just decided to put it in total, and you will get the reason now very soon. Now, we want to look at opening shareholder fund. Please go back to the question. Go back to the question. Go to that balance sheet inside the question.
Mhm.
Now, what is the total equity that you are seeing in the question?
779.
7798.
Yeah.
That is 7798 is the capital employed. That is the total capital employed because you are
Oh,
doing equity plus debt. That's a
yeah.
figure. Yeah,
Yeah.
so
Total
the total
equity is
equity
5263.
exactly. Now,
Yeah.
what are the components of the total equity, please? I am going somewhere with this question. What are the components of total equity that you are seeing in this question?
So I'm seeing the ordinary share capital and the retained earnings.
Good. Let us leave this question alone. Apart from the two you have mentioned now, what other things do you know that we normally have them in total equity? Other components that we normally have in
Yeah.
inside total equity.
Uh,
You know, we normally have share premium.
yeah. Premium.
How do we
Uh,
come about share? How do we come about share premium? Your company, the the share capital of your company is 50 kobo. And when you sold shares to people that you tell them to come and become shareholders, when you sold shares to them, you sold shares to them at 5 naira per share. You sold it to them at 5 naira per share, but your capital is 50 kobo. So you have sold the shares to them with premium. Now, how are you going to post it as a finance manager? How are you going to post it? You will put 50 kobo out of the 5 naira. 50 kobo will go to share capital. Abi, then
mhm.
4 naira 50 kobo will be credited to share premium. 50 kobo will be credited to share capital. 4 naira 50 kobo will be credited to share premium. Then the 5 naira will be debited to bank GL. That's how you are going to post it. And that is how we have share premium in our account, in our books. Do you understand? Another thing that is equity that you normally have is we call it other equity components. Do you understand? As a result of other comprehensive income. All right. Some things that are in the comprehensive income, we put them in other equity components. We also normally have revaluation gain. Okay.
Mm-hmm.
Revaluation gain. When you revalue an asset upward, we always have it inside equity component and any other thing that is called reserves. Some people can call retained earnings reserves. All right.
Mm-hmm.
Sometimes,
Mm-hmm.
sometimes, maybe if you work in some industry like financial, like bank, eh? If your company is bank, right? Regulator, regulator will force you to be keeping some money aside as reserves, or even some other companies sef, they will force you to keep some money aside as reserve. It is not your retained earning o. Start be keeping some money aside as reserve. That one too is also part of equity, total equity. Another one that is also part of total equity is non-controlling interest, NCI. You know about NCI, right?
Yeah.
Non-controlling interest. So that one too is also part of equity. See, the reason I am saying this now, when we were reading the story, please pay attention. When we were reading the story, how many of these things did we see inside the story that happened to the question, to the company, Eco PLC during the year? How many? Did you see anything that looks like non-controlling interest when we're reading?
No, I don't think.
Did you see anything that we give rise to other equity component or reserve or anything? No. Did
No.
we see anything that will give rise to share premium?
No.
No. Now, had it been another examiner can recheck this question, hmm? And they will add share premium inside the story. How are they going? They will not say share premium, but they won't tell you share premium. They will just tell you that during the year, during the year, the company raised another share. During the year, the company raised another share. Listen o, and the number of shares they raised, eh? The number of shares they raised was 277 shares. 277, 2 million, eh? 2,770,000. Do you understand? That is the number of shares they raised. Oh no, let me put it like this. The number of shares they raised, yes, two 2,770,000. That's the number of shares they raised. So when we now added it to this one, to this 2,330 in million, the total number of shares they now have is is 5 billion shares. But you know they already have 233. They raised another 2,770. The total number of shares is now 5 billion shares. That's the twist examiner can put inside the question. We are going to consider that upcoming. They now told us that shares they raised during the year, they sold it at 7 naira. They sold it at 7 naira per share. Please, what is their share capital per share? What is their share capital in this question per share? How much is it per share, their share capital? How much?
No.
Yeah, please be active. How much?
So, Say 7 naira per share.
Mm-mm, mm-mm, mm-mm. 7 naira per share. I am the one bringing that one up. Oh. I am saying,
Oh,
assuming examiner had it, but
okay.
originally, from this question, what is the share capital per share inside the balance sheet?
Share capital per share is
Yes.
22330.
No, no.
Okay, from the
When I say
balance sheet.
when I say per share,
Mhm.
it is for one share. You are giving me 233 million naira. 233 million naira is the total share capital. How much is one share? One share is there in the question. Ordinary share. Can you see? Ordinary share
Mhm.
capital. 10 kobo.
10 kobo per share.
Thank you. That is what I am asking for. Now, it is 10 kobo per share, but examiner now said during the year, they raised new shares, they sold new shares, and they sold it for 7 naira. Are you getting me now? And they
Yeah.
sold it for 7 naira. What's going to be the share premium? The share premium is going to be 6 naira 90 kobo per share because their capital is 10 kobo. Do you understand? So,
Okay. Yeah.
yeah.
Yes. Yes.
So,
I get you.
I am good.
Yeah.
So, I am
Seven minus it's the 7 minus
10,
10 kobo will give
10
you 6 now.
exactly.
Yeah. Yeah.
Yeah. So,
That's it.
so,
Oh, okay.
uh
Okay.
so I'm just saying that if you will need to if you will need to consider share, these people raise share during the year. That is why we are having share premium inside this question. Now, all those things are not there. Are you getting me? All
Mhm.
those things, they are not there. I am going somewhere, and you already told me that the only two things we have in the equity, they are ordinary share capital and retained earnings, abi.
Mhm.
Shebi the now among these two things, how many of them do you think changed? Is that the same thing that because this balance sheet that you are saying, May 31, 2017, that is the year end, abi?
Then, yeah.
That that so I call it closing balance sheet, abi?
Yeah.
Okay. Can I also call the equity of 5263 closing equity? The equity, there are noise in that place. So the equity, can I
Mhm.
also call the equity eh,
Mhm.
of 5623? Eh? Can I also
Mhm.
call it closing equity, closing shareholders fund? That's our shareholders fund.
Yeah.
It is also it is closing shareholders fund. Do you get me?
Yeah.
Do you understand what I'm saying?
Yes, I do.
That 5263 is closing shareholders fund. What is the makeup of that 5263? Retained earnings, which is 5030 and 22233. Those are the makeup. Now, what do you think changed during the year? Do you think share capital changed during the year? Do you think retained earnings changed during the year? Because we want to remove the change. If we can remove, if we can remove the things that changed in this equity during the year, we will go back to opening equity. That's how we are going to get opening equity. So that's what we want to calculate now. We want to say calculation of shareholders opening shareholders fund calculation. SHF, shareholders fund calculation. See the way I'm going to calculate it in million naira. I will say closing. What's our closing shareholders fund? Our closing shareholders fund is 5263 in million. Please, I hope you are still strong. I hope you are still with me.
Yeah.
5263. Now, what do you think changed? We need to remove something that changed. That, see, this 5263 is the shareholders fund at the end. By the time you remove whatever change, whatever cost it during the year, it will go back to opening shareholders fund.
Shareholders fund. Yeah.
So what do you think changed during the year? We have said they did not issue shares. So there is nothing like share premium. And there is nothing like additional number of shares. So that means ordinary share capital did not change. Is that it? Do you agree? Ordinary share capital did not change.
Did not change. Yeah.
Good. So it is retained earnings that changed.
Yes.
Do you remember we have EPS, profit after tax, of 25 kobo, and we converted it to total, which is 582.
Yes, which is
good. That's EPS. That is profit after tax. Do you remember we have dividend? And the dividend is like about 12 kobo when our profit after tax was 25 kobo. Where is the remaining?
Okay.
The remainder is what? Our profit after tax is 25 kobo per share. Our dividend is about 12 kobo per share.
Yeah.
What is the remaining money? The remaining money is what? Look at it here. What's the remaining money? Can you see it on the board?
Yeah. 0.134.
Good. That is our retained earnings. That is the reason I calculated total retained earnings. Can you see? 312.52 million. Can you see? That's the reason, because we will need it. So it is this 312.52 million that they added to retained earnings that made it change to 5 something. So we are now seeing
take it out. If you say 5,228, if you say 5,263 minus 312.22 million, that will give us our opening.
It will take us back. Yes, it will take us back to our opening shareholders fund. 312.52. Okay, 312.52. That is our retained, I will call it retained earnings.
Or we can call it the total retained earnings before.
No. Yeah, the way we normally call it is retained earnings for the year. Retained earnings for the year. I don't want to use total. Okay, you want to say total retained earnings before
Yeah.
uh, closing? No, let us just say retained earnings for the year. So if you remove it, if you less it, less, oh yeah, what do you get?
That will give us
That will be our shareholders fund at the beginning. And you see the way they went to hide these things.
that will give us 4950.78.
Okay. Okay. 4956.48. 4956.48.
77.78. That's
Huh?
that's that 3-1 that 312
Yeah.
is point 22, not 52.
Okay. It is 0.22.
Yeah.
Okay. Okay. 78. Okay. Good. So this is our opening shareholders fund. So we can
Okay.
now go ahead. So we can now go ahead to calculate our R and move to the next slide.
Okay.
Therefore, R is equal to our profit after tax. What did we get?
Our profit after tax is 582.5.
Good. 582.5 divided by our opening shareholders fund. Four nine
Oh, nine.
five 56.78. All right. That's all in million.
Divided
They
by
are
four
all
nine five five zero, not 50.
495.
0.78.
Okay, 4950.78. So what do we have? Times 100.
That will give us 11.7.
11 point.
11.7658. You can see
11 point.
11.77 or
Okay, 11 point.
11.77.
11.77%. Good. That is our R. Therefore, G is equals to R times B,
Times
which is
R.
equal to 11.77 times, what is the B that we calculated?
The B we calculated is 553.6.
Okay, 53.6. Okay, times 53.6. 0.6. So what do we have?
Oh, give us give us 630.87, which is approximately 631.
Are you sure?
Yeah.
Okay. 6. What did you get?
Six three
Okay.
zero point eight seven.
Okay, good. Divide it by 100 because this 11.77 is percentage. This 53 is also percentage.
Mm-hmm.
So you should divide one of them by 100. So if you divide it by 100, you should get 6.3. Abi,
Mm-hmm.
that's 6.3%, right?
Yeah.
Good. Or let me write it like this. Instead of writing that 11 points, I will write it like this. Divided it by 100, it will be 0.1177.
Mm-hmm.
So if you do it like this, you will get 6.3 straight away.
Yeah.
So
Two.
to cut the long story short, our G is what? Our G is 6.3. So let us quickly calculate our KE. So I repeat the formula. KE is equal to dividend of year zero, that's dividend per share, 1 plus G divided by market price X div plus G. So our dividend is what? 0.11. Dividend is 11 kobo. Yeah, about 12 kobo. 0.1159. Are we still together?
Yeah.
0.1159. That's our dividend. Our growth rate is 6.3. That would be 1.063. If you divide it by 6.3 divided by 100 plus 1. Our market price is 2.76 XD. Growth rate 0.063. So what do we have as our KE?
Okay,
Okay.
you that'll give us 0.1076
So whatever you get multiplied by 100, what do you have?
times 100. That'll give me 10.8.
Good. Approximately 10.8%. That is our KE. Okay, that's our KE. Okay. Um, in this video, let us end it here. Please quickly come back so that we can continue. Can you continue? Are you still strong to continue? Eh?
Can we, how's your
Okay.
schedule like tomorrow?
Uh,